In today's video, I'm going to take a look at gold. As most of you know, I'm a contrarian trader, so at bottoms when everyone else is afraid to buy and they think price can only keep going down, that's when I want to be a buyer, go against the crowd, and conversely, when everyone is bullish and thinks that the sky's the limit and there's nothing that can turn the market back down, that's usually when, again, I want to be a contrarian and be a seller. I think we've probably reached or pretty close to have reached that point in gold. This rally is 4.5 months long. I kind of thought um, when we broke through the all-time high at 1923, at that point the all-time or the big round number of 2000 started to pull like a magnet to pull price higher, and I kind of think we're going to have to close above 2,000. That should bring in the last holdouts and anybody that has sold prematurely. That's probably going to drag them back into the market for fear that the price is just going to continue to run away from them. Um, so not only is the intermediate cycle very mature, but the daily cycle is very mature at I believe we're either 39 or 40 days. I've noted this in the past, a daily cycle low, wherever the top comes at here. Again, I'm not trying to pick a top today by any means. I've never found any kind of strategy or tool that consistently picks tops for me, and I've never seen anybody do it with any consistency. So definitely not trying to pick a top today, but what I'm going to say is that when a top does come, a daily cycle low should break the daily cycle uptrend line, which means whenever we do get a top, the decline should be steep enough to break this trend line right here. It should also drop either far enough below the 10-day moving average or last uh, enough days below it to turn this 10-day moving average back down. And I've been debating on how I thought the um, intermediate decline would play out. I was kind of assuming that it was going to play out like this one, where it was just a long sideways grind. But because we've stretched price so far above the long-term moving average, let me convert this to the 200. All right, you can see we've just got a lot of, kind of similar to the NASDAQ, we got a lot of white space between price and this 200-day moving average. I now think that the um, decline into the intermediate cycle low is more likely to be one of those sharp, scary declines rather than a long, slow grind. The rubber band has just gotten stretched too far to the upside. It's probably going to require a violent regression event back down to the mean. Um, Now, there's huge momentum in this market. So I think once we get our daily cycle correction, again, something that comes down, breaks this trend line, turns the 10-day moving average back down, you're going to see a, a flood of dip buyers come back into this market. And I kind of suspect the top for this particular intermediate cycle is going to be some kind of a double top. So let's say we come down. I'm going to guess we'll bottom somewhere here in the first week of August, break the trend line. This is not a target by any means. I'm just um, doing some hypotheticals here. But I think the dip buyers are going to come in aggressively. We're going to get another strong push up to a test. We might even be able to marginally break above this top wherever it comes. And then we get our second leg down into the final intermediate cycle low, and I think that low is going to at least retest this 1750. This was a very stubborn resistance zone the banks were trying to defend against. A push up to 1800 here for multiple weeks. They managed to turn it back down at 1750, and then finally price broke through that, and then we got the short squeeze, taking gold all the way up to 2000. So this is a potential target zone for the next intermediate cycle low. Would be somewhere in this consolidation box between 1750 and let's call it 1675, right in here. When this happens, when we get our intermediate cycle low, this will be, this sentiment will be 180 degrees from what it is now. Right now, everyone is convinced that there's nothing that can stop gold, that it's going to go up indefinitely. I'm starting to hear talk of $3,000 gold, of the COMEX defaulting. These are the kind of things you hear at intermediate tops. And then, like I said, I really expect an extremely strong bounce out of this next daily cycle low. And then when that fails and we come back down, that will be completely disheartening to the gold bulls. And assuming this, well, it will, the 200-day moving average will continue to move up. So I don't think it's out of the question at all that the next intermediate cycle low will test this consolidation box and possibly test this 200-day moving average. And then that's going to be your next buying opportunity. I think that buying opportunity, we will get a breakout above 2001 that will be sustained. And then at that point, we can start talking about $3,000 gold. And I'll end with some sentiment levels. Again, being a contrarian, when everyone else is bullish, as you can see here, the gold is at levels that we really haven't seen since way back here at the end of the last bull market in 2011. This is not a time that I want to be, continuing to push 4.5 months into a rally. This is a sign of everybody's bullish, and I want to be a contrarian. I want to take the other side. I want to sell them my shares. And then on the flip side, the dollar, as I'd said in my last video, the exact opposite sentiment, about as negative as it was, even more so actually, than the last 3-year cycle low here in 2018, and approaching the levels that we saw back in 2011 and 2008. So again, it's not a spot where I want to assume that the dollar is just going to continue down to zero. It's probably, there's too many people bearish on the dollar, and we need some kind of rally to clear this negative sentiment, and then that'll set the stage for the next leg lower. But right now, there's just too many people are bearish. So we've got extremes. I think we're set up for contrarian trades. I think it's about time for gold to give us first a daily cycle correction and then a deeper intermediate correction. And it's definitely time for the dollar to bottom here soon and give us an intermediate rally and correct some of those sentiment extremes in both of these markets.